Right. Thanks so much for that, Pranoy. Let me welcome in Mayuresh Joshi from Angel, who joins us for a check on the markets. Mayuresh, thanks so much for joining us. I'm going to start off with the kind of volatility that we are seeing in the markets. When the markets were up about 1%, everybody was talking about 8,200, 8,300 on the Nifty. What's this correction owing to, especially in the banking space? We seem to be having a problem with the audio out there. Let's fill you in with some news and then go to Mayuresh for his comments. Today is a crucial day for Tata Steel's plans to sell its UK assets. Liberty House, the UK steel firm led by Sanjeev Gupta, will put in their formal bid for the assets on offer. Swati Khandelwal Jain, who has been tracking that story closely, joins us with the details. Swati.
Well, that's right. In fact, the stock is also reacting positively to that bit of news, as you can see. But as you pointed out, indeed a crucial day for Tata Steel because its UK assets will finally, there'll be bidders who will come in and put in their letter of intent for those assets. And we understand, and in fact, Liberty House themselves have confirmed that they will be putting in a bid for those assets. The details of those are still awaited, but Liberty House, along with Sanjeev Gupta, will tie up with Tata Steel executive John Bolston, who is the former director of Tata Steel's European long products business and is currently the chair of UK Steel Trade Association. So that's one party that's putting in bids for those assets, and it's not just them. We understand there are a whole host of other players who are looking at those assets very closely. Albion Steel being one who's looking at specialty products from Tata Steel's assets, the ones that are essentially used for making aircraft or automobiles. So their interest is coming in as well. And Grable Capital, remember, they were the ones who bought the long products business or Scunthorpe unit of Tata Steel earlier this year, are also looking at some of those assets. So today being the day when you will finally see the letter of intents coming in, hopefully we'll see a couple of these players. Of course, after this, a week from now will take for them to shortlist these bidders, and of course the announcement will come in post that.
Right, Swati, thanks so much for that. We're also watching out for TVS Motors earnings today. Remember, strong quarter expected, driven by higher volumes and favorable product mix. Hirul tells us what to expect. Hirul.
In terms of TVS Motors, it's expected to be a strong quarter, mainly driven by higher volumes as well as a favorable product mix. Revenues are seen up by around 11%. Profits are expected to improve by 20%. Margins are expected to expand and come in at 7.2% versus a 6.1%. And this is mainly on the back of benefits of lower commodity prices as well as improvement in volumes. Now, additionally, if you go to see, the volume growth is also surprising on a positive end, with growth levels of almost 8.3% on a year-on-year basis. If you see scooter volumes, they have risen by 15%. Motorcycle volumes are up around 12% on a year-on-year basis. However, it's the moped volume that has remained flat. And lastly, if you go to see in terms of where realizations are concerned, they are also expected to improve due to higher share of motorcycle and scooters versus the mopeds. And realizations are seen up by almost 6.6% on a year-on-year basis, and sequentially a growth of almost 3.7 to 4%. So all in all, across parameters, we are expecting a spectacular set of numbers by TVS Motors.
Right. Mayuresh Joshi now finally joins us. I hope we have the audio connection with him. He's, of course, from Angel Broking. Mayuresh, I was asking you what led to that weakness in the bank Nifty, led by what's happening in the private sector banks. What is your own assessment of how these stocks are poised?
No, largely, if you look at the way the corporate and the SME book is panning out for a lot of these players, whether retail, whether private-oriented or public-oriented, you are expected to see some stress come through, not just for the first quarter numbers to come through for the next fiscal, but I think the first half will be equally challenging as well. So the kind of stressed asset that a lot of these larger private sector banks have put on, I think that is going to take some amount of toll, and with that respect, I think the earnings estimates for FY17 will largely be muted, and they have come down to a large extent by the analyst community. On the public sector side, again, I think there is a large amount of debate because the numbers are still not out. If the asset quality pressures continue on that aspect itself, the valuations look extremely cheap. Again, I think the kind of exposure that a lot of these banks have towards the stretched out sectors. I think the economic recovery in terms of both asset quality as well as the NIMs and spreads to recover with credit growth expected to come through is going to take it's going to take some amount of time, and it's going to be very slow and gradual. So I think the markets are realigning to the fact that the bank earnings probably in the first half of the current fiscal are going to be very slow and tepid.
How are you reading this entire piece around Liberty House trying to buy the Tata Steel assets in the UK? The whole conversation around it, what it means for Tata Steel. It's been an ongoing event, and today we'll probably get the official bids from them. How are you reading it?
Been to and fro, right, over the past so many weeks. So let it come through. I think let it fructify in the sense of what actually comes through on the table, what kind of valuations they are looking at, if they are looking at any. And if Tata Steel is getting to escape through this one, I think it's going to have some amount of impact in terms of how the stock price might move. But I think a lot has got gestated in the times of the price movement for Tata Steel. So largely, I think let's let the deal fructify, let it come on the table finally. I think the markets will react only after the deal fructifies now.
Auto sales numbers have been pretty good, and on the channel we've been speaking about how a lot of the companies have done well, even though exports continue to be an overhang. How would you assess the auto sector right now, Mayuresh?
So numbers have been a mixed bag, Mini, and largely I think if one attributes monsoons to be much better this time round, the two-wheelers will see some amount of exponential growth going forward, specifically in the second half. As I'm saying, I think it's not going to be an immediate impact in terms of how volumes will happen after the rains come through. But again, I think the second half can be much better in terms of what volume expectations a lot of managements have put forth. So if that happens, I think a lot of two-wheelers having rural focus should continue seeing good amount of traction, specifically on the volume front. Yes, I think exports have taken some amount of pain and hit over the past few quarters. But if those markets start reviving again over the next few quarters as well, I think the consolidated numbers for companies having a mix specifically on the export market, I think the gradual process there will also be quite exponential, because the base itself will be quite low when you look at FY17, FY18 earnings. So yes, I think stock-specific action within the auto space where valuations are looking attractive is the way I'll play at things, whether two-wheelers or four-wheelers.
Fair enough. I am going to ask you about Aurobindo Pharma. You've had a big brokerage house, open its, coverage on that stock. Within the pharma pack, how do you see Aurobindo Pharma stack up? Because it's a big winner today.
It's been doing quite well, right, in terms of earnings as well. So if you look at the kind of management commentary around their injectables business, they're expected to launch around 18-20 injectables over the next couple of years. And if that really fructifies, my own sense is that the margins are much higher there, and the value size in terms of the E&D applications are quite large for Aurobindo Pharma. Having said that, I think even within the ERV space itself, I think Aurobindo has been doing pretty well. The formulations business now constitutes almost 80-85% of its overall top line. With the Activist and Natrol acquisitions, again, I think they've got a huge amount of market share gains, specifically in Western European and the American markets. So again, I think largely the stock is expected to keep on posting a reasonable amount of earnings growth, both in terms of how the top line and the bottom line is expected to perform, and that will have a positive impact if the ND applications and the injectables, as the management has been guiding, if they start coming through in terms of approvals. My own sense is the stock can report a steady set of numbers. So I think the markets are going in with that presumption that earnings will remain extremely steady for Aurobindo Pharma.
We are in the midst of earnings season, Mayuresh. On the whole, earnings have been pretty good. We've had Godrej also come out with numbers today. TVS will come out later. What are the themes that you're talking to your clients about right now?
It's more macro-based at this point of time, and it's more cyclical-based themes that one can really play with. So I think consumption is something that I like for a long period of time. If monsoons support, my own sense is that a lot of the consumption-driven stories will do well. But again, I think one must understand the fact that Q1, Q2 will not have exponential spurt in terms of how earnings will stack out. The monsoons are genuinely better than what one really perceives. The second half will be much better in terms of both volume growth and realizations for consumer-driven stocks, whether white goods or otherwise. Secondly, I think cement as a theme is something that I've liked over a period of time. I continue liking that. Utilization levels picking up and realizations started to pick up. If utilization levels and realizations start improving, the volume story itself will play out more meaningfully, and with government reforms coming through both on real estate and infrastructure, my own sense is that cement volume growth can be in excess of 10% over the next 12 to 15 months. If that really happens, the return ratios will improve drastically, the cash flows will improve drastically for a lot of these companies, and that will have a multiplying effect on how stock prices will move. So cement, stock infrastructure, again I think rural discretionary themes like consumer discretionary stocks, and again I think large cap IT is something that I'll continue to do.
Right, Mayuresh, always great talking to you. Thank you so much for joining us. And we continue the discussion around the rural landscape. Up ahead, the spotlight is on India's drought crisis.